Where does it keep going here? There we go. Okay. So we'll get started in a few minutes as people are jumping on the call. Is it a little warm or we're okay in here? You're okay? Okay. 1 second. Okay. Let me submit some more people. Hi, do you need me to sign something? You have a pen? You need to come prepare.
I know, but I know that's cool. We just have a bit.
Uh, this one here. Good.
Okay, sorry. Have a good class, guys.
Thank you, I appreciate it. Good morning. Happy Valentine's.
Thank you so much.
How are you guys? Welcome to today's contract class. Let me admit some people in real quick. Okay. Hot topic today. Super hot topic. Wildfire issues. Defeasible space and fire insurance. Okay. So this is again information straight out of the California Association of Realtors legal sector that provides us with all of the resources that we need as real estate professionals to stay on top of what's happening in California. So thank you very much for all that are on Zoom. And again, please make sure, this is a disclaimer, that if you're on Zoom, please mute yourselves if you have to take a phone, okay? So that way we respect the others that are, listening to the presentation. Okay. So with everything that has happened, right? The unforeseen fires that we saw through Pacific Palisades, the Altadena area, Pasadena, it's a reminder, right, that it can happen to any of us, any property at any given time. So today's topic is going to go into, the understanding as real estate agents, how do we maneuver the disclosures, and also if a property falls under these parameters in place. Okay. So if you can take a look at the image to the right, you see the flames, okay? You see the house, and then you see like a bubble, right? Well, part of the defeasible space is to be in compliance in certain areas. You know, it's a safety for the homeowner, but also the neighbors and also the fire department too, when they have to go in an emergency. And if there's too much brush, trees, or things that can cause ignite a fire, then it makes it more devastating to try to control, right? So this is what the topic is talking about in today's lecture. So again, my name is Simon Casares. I am your instructor for today's contract class. So thanks for being here. And again, happy Valentine's to each and every one of you for jumping on the call. All right, so current wildfire issues in California, defeasible space compliance law, and the availability of fire insurance. Right now, we're seeing a lot of issues with fire insurance, right? If you're in a real estate transaction, it's getting a little harder and harder and harder to get in home insurance, you know, and due to the significant impact that we just saw 3 weeks ago, a month ago, right? Insurances are pulling out and not insuring properties. And that puts us in a bind and in a situation, right? If we're in a real estate transaction, right? The lender is requiring that we have insurance for these type of circumstances, right? Oops, what happened here? My apologies. So therefore, the problem is that deals are falling out of escrow because we're not getting insurance or it's costing too much, you know, and a lot, even my homeowner insurance went up. Yeah, it's crazy, you know, and I don't live anywhere near the canyons or anywhere that I believe that would impact. But again, a fire can happen anywhere, right? It can be electrical, it can be a candle, it can be so many things that can lit up and ultimately start a fire, right? So in essence, we're seeing more and more issues when it comes to insurance. So the feasible space requirements, okay? What is a defeasible space? It's creating a buffer zone around the property between the structure, the plants, or other combustible materials. Slows the spread of wildfire and protects the safety of firefighters defending the homes. 100 feet of space divided into 2 zones. Okay, so think of it from this perspective, right? Especially if you are listing a property or if you're a buyer's agent, right? Part of what we do as real estate agents is what document must you do? Okay, what document that you do when you're in escrow as a buyer's agent or even as a listing agent? There's a form that you do, a visual, right? What is that form called? It's
Avid.
called an abbot. It's called an abbot, right? A visual inspection. Okay. Where a real estate agent does a physical view of the property, right? They're not going to move furniture. They're not going to climb the roof. They're not going to go under the house, but it's just a visual inspection of what they see. And part of the requirements as a real estate professional is to identify things that may or may not be relevant to the buyer or relevant to the seller because they may not know. And with all the new changes that transpired, guess what? There's probably going to be more documents and more forms that we're going to have to be involved in because of everything that transpired 3 weeks, 4 weeks ago, right? With the fires. So this creates what the requirements are as a real estate agent navigating disclosures, right? Does the property fall under the parameter? How do you know if it does or it does not? Well, that's where your natural hazard disclosure comes into play. And I'll touch a little bit more on the NHD reports and how you can identify if this property falls under those disclosures. Effective as of July 1st of 2021, applies to sales of residential 1 to 4 unit properties located in high or very high fire hazard severity zones, unless they're exempt from the transfer disclosure statement. Unlike fire hardening disclosure, year built does not matter, okay? So if the property falls within a very high fire hazard, it will be identified by 2 components. One, the owner may know because they might have bought it within that time period of 2021 to now, right? So they probably were aware of it. 2, when you're doing the disclosure, seller disclosures, right? Part of our job and our responsibility is to provide all seller disclosures to the buyer, which includes TDS, SPQ, all of the other pertinent disclosures, plus the natural hazard disclosure, better known as the NHD. And on that NHD is basically anything surrounding the property, which is a benefit and crucial, right? Crucial for the buyer to know exactly what they're getting themselves into, because this may impact their homeowner's insurance. Maybe it will not impact them that much, but in the future, because this property falls under that severe fire hazard zoning, in the future, that might go up. I can tell you from personal experience and seeing real estate transactions, we get 2 properties that are identical. A 3-bedroom, 2-bath, 1,500 square feet on a 7,500 lot, 1955 built. But that home is in the basin of the San Gabriel Valley, right? The mountains. I get that same identical property, and now more internal, more south, okay, same square footage, okay. From personal experience, the insurance is going to be a lot higher than the house that's more in the city. Does that make sense? Okay, look at it from this perspective. Automobile insurance. Are all automobile insurance the same? Absolutely not, right? No. A lot has to do with the type of vehicle, right? The type of engine, how many miles. It also, they look at your job, right? The distance from your home to your workplace. Because if your workplace, okay, is 50 miles and someone else's workplace is 5 miles, do you think your automobile insurance is going to be different? Why do you think that? Why do you think that someone that has to drive 50 miles is going to pay more money for automobile insurance? Yeah, more wear and tear. Yeah, but absolutely. But the most critical one is that's a lot of driving, and fatigue can come into play, right? And when people are tired, what happens? Yeah, you're not alert sometimes. In a split minute, split decision, you may not react if you're fatigued, right? So those are some of the variables that insurance carriers look at when determining estimates, right? Estimates of insurance. Well, that also goes to real estate insurance or homeowners insurance, folks. It's the same element. It's unfortunate, but the reality is that it impacts where your property is located. You know, not all insurances are the same. Not all insurance companies or carriers are the same. And this is why it's important that the buyer does their due diligence and start the process immediately when their offer gets accepted. Don't wait and don't let your clients wait. Remind yourself as a buyer's agent that as soon as your offer gets accepted and you know you got to do inspections, your due diligence for the buyer, right? That part of that is now, because it's not like it was 10 years ago, folks. Okay. It's a different way of doing business now because a lot of homeowners insurances are leaving California. Premiums are going expensive and it's taking longer to process. And that can be a delay. And if there's a delay, folks, that can jeopardize your position from the deal falling apart, all time, effort, and energy that you put into this because the sellers cannot wait. It compromises your position, and the seller may put a notice to perform or want to cancel because of the insurance. So be mindful and be on top of it and start having that conversation with the buyer immediately when your offer gets accepted. Mr. and Mrs. Buyer, part of the process now is with everything that has transpired, you know, homeowners insurance, what used to be easy to shop around, it's a little bit harder to shop. So I would encourage you to start shopping for homeowners insurance. One, the lender's going to need it, right? Yeah, the lender is not going to lend without a homeowner's insurance. Okay, they're not going to take a gamble on the property without any insurance to protect them, because if that home, just like we saw in the Pacific Palisades and the Altadena area, a lot of those homes may not get rebuilt because they didn't have adequate insurance. And these are homes that are 10, $15 million or more. You know, people have lived there for many, many years because the more insurance you carry, the more money too, right? Yeah, you got to think of all of those positions, right? And more so, you know, and it's always good that the insurance, you know, every year you renew, so you let, and they send you a form to say to the homeowner, hey, have you added square footage? Hey, have you added any remodeling to the property, right? Hey, did you add a bathroom? Hey, are you still the owner of the property, right? Are you living in the property? Why do I know that? Because I got them. I got one of those forms just recently. You know, they want to make sure, because if they can find that loophole where they don't have to pay, they're going to do so. And now you're in a volatile position, right? Not you personally as an agent, but I'm saying as a consumer. Does that make sense? Okay. Now, if the property is exempt, right? Owners have passed away, the successor to the trust, then they are exempt from filling out the TDS. Then that may change also the disclosure, right? Because they may not know if the property is or not. But the good thing is the NHD, the natural hazard disclosure statement, will definitely probably have the different color coded zonings if this particular property subject address falls under the severe hazard zoning. Requirement documents of compliance with the state or local defeasible state laws, or for buyers to agree to obtain documentation for compliance. Slightly different requirements depending on whether the local jurisdiction has an ordinance requiring owners to obtain proof of compliance. Watch out for local ordinance with the actual point of sale requirements. Okay. Now, it's not our jobs. Okay. Let me put this very clear. It's not our jobs, but it is our responsibility. If you do know that it falls, you need to let the sellers know. Hey, I believe that this property does fall under the defeasible space, because you're so close to the mountains. There's a lot of shrubs. You live near a hill. There's a lot of dry plantations. All of those can be a combustion, right? That can light up like fuel. So they may have to be part of that requirement where the fire department may have to do an inspection to make sure that the property is clear. Because if it's not clear, then they're going to put a notice for correction. Okay. And that notice of correction, someone is going to have to do it and someone is going to have to pay for it. And if you're representing a buyer in this case, right, the buyer is going to say, well, I don't know the property. Why should I do it? Right. So you got to also look at all those parameters because sometimes if there's a lot, it can be very expensive too. But in order to get the clearance, you may have to do it. Okay, if you represent the seller. So areas without a local ordinance requiring an owner to obtain documentation of compliance. Okay. So let me omit someone real quick, and I think we have some questions. 1 second. Thanks. Yeah, I think it's an error here, but thanks, Robert. Areas without a local ordinance requires an owner to obtain documents of compliance. Either the buyer must agree to obtain documentation of compliance within 1 year after closing. You got to slide it. Closing escrow, or if the seller has obtained documentation of compliance within 6 months prior to entering into the contract, the seller must provide the documentation to the buyer and provide information on the local agency for which a copy of the document may be obtained. Okay. So if the property does fall under the local ordinance, then it must be part of the requirements. And I believe that in a couple slides, it's going to tell you what the requirements are. Okay. And it says here, if the seller has obtained the documents of compliance within the past 6 months prior entering into the contract, seller must provide the document to the buyer, right? And again, it's just all part of what? Disclosures, right? It's really what it is. Okay. So in essence, most of the properties, if they fall under here, there's going to be additional paperwork that will that both the buyer and the seller will have to initiate and ultimately sign. I'm not sure if I'm going to have time to go over the FHDS, but if I do, I will definitely do it if it doesn't go over our time. Okay, so for the areas that have enacted a local ordinance requiring an owner to obtain the documentation, the property is in compliance. Either the buyer must agree to comply with the requirements, right, of the local ordinance if the ordinance allow the buyer to do so, or the seller shall provide the buyer with a copy of the documentation that complies with the requirements of the local ordinance and information on the local agency for which a copy of the documentation may be obtained. Okay. So part of the responsibility, okay, if any of you have done any sales in the city of Los Angeles, there's a form called the 9A report, right? And that's just part of the process. Certain cities, not all cities, require a city inspection. Okay, some do, some don't. Some of them can be a pain. Some of them don't have them. Some you may have the option to waive it, right? Well, now with all of the changes that have transpired, it's important to understand and educate yourself if this particular home you're going to list or this particular property you're having your buyer buy, that we need to know if it falls under these requirements. Okay. Because if someone drops the ball on this and that comes back to haunt us, they can say a claim that it was our responsibility, right? Because that's the initial process. And the buyer may have a claim against the agents and the brokerages. So be mindful of that. So part of the requirement and the forms that you're going to be utilizing is the form fire hardening, defeasible space disclosure and addendum car form FHDS. The form lays out 6 potential ways to comply, so the parties may indicate what method of compliance applies to their transaction. The requirement is part of the same law, requires sellers to provide as the TDS, and has the same exemptions and cancellation rights as the TDS law in general. Okay. Remember, this is a disclosure. And if the buyer doesn't feel comfortable with this, then they can use this as a way to back out of a transaction. They don't have to move forward with it because what did we talk about earlier, right? It may be very difficult to get insurance. It may be pricey or very expensive, right? And there may be a limitation as well. They may have some stipulations when they're getting quotes that they will only provide up to a certain amount of coverage. So you got to look at all that. And those may be a stop that the buyer may says, look, it's just too much of a risk and liability. I don't want to take the chance. And they have the right to. This is again part of the due diligence process that the buyer has to do any and all inspections, review all seller disclosures to make sure that they completely satisfy with the overall condition of the property and any documentation that the seller has provided as part of the process. Okay? Because once they sign off on it, they cannot use this as an excuse, right? Now, with this being said, if something comes up later, right, during the process after the buyer has released contingencies, well, the buyer does have that stipulation of an additional 5 days to review, right? With the option to cancel if they just feel, no, this is something new we didn't know. We have 5 days to review this. I'm deciding to do an additional inspections, ask more questions, and then make a determination if I want to continue with it or not. Well, you're saying, well, Simon, they released that as a condition. Yeah, but they just got something new that was thrown by the seller to the buyer. And maybe the seller didn't even know and got something from the city fire department or the county fire department saying that they have to. Because they're going to be very diligent and they're going to be seeing properties that are on the market, okay, properties that are in escrow to make sure that they're in compliance. I don't know if it's going to be something super mandatory in the beginning, but I can tell you with all of the changes happening right now, ladies and gentlemen, it's important that you're on top of all of this stuff. The requirements is part of the same law. I think I spoke about that. Per the residential purchase agreement, the seller needs to provide the FHDS within 7 days of acceptance. Okay, similar to SBQ, TDS, lead-based paint, and all of the fund disclosures that we provide our clients, right? Well, this is part of that now requirement too. Okay. Now, if you don't provide it within the time frame, right? Let's say that you and your client, the seller, wait till the 10th or 11th day, that is now considered a new material facts and new disclosure. the buyer's going to have an additional 5 days to review it and make a determination and decision if they want to move forward with the process or cancel at that time. And if they decide to cancel after releasing that condition, as I explained earlier, they have the right to, and there's nothing that a seller or the listing agent can do. Now they can argue the fact and says, well, no, but the contract is the contract and everything's in black and white. And that's going to be your position to maneuver that depending on who you represent, right? If you represent the buyer in this case, you're going to fight for your clients, right? Because your job is to take care of who? Your buyer's best interest, right? So in essence, if you represent the seller, make sure you're having those conversations so that way you don't have these particular delays and issues, right? Because sometimes that happens. It's out of our hands sometimes. We have no control. But then the seller forgot, oh, by the way, I got this about 6 months ago, 7 months ago, and I didn't know I had to disclose that. Well, this is where you need to start having those conversations if you believe so. Again, in reviewing disclosure, part of the responsibility as a real estate agent, folks, is to identify if this property or properties fall under the severe fire hazard zoning, right? And where can you find that again? I said it earlier, your NHD report. Your
Right.
NHD will tell you because they do these type of surveys. Okay.
Simon is, I'm sorry,
So
a
7 days after
question, please.
acceptance, the buyer and seller cannot agree or who will be responsible for the feasible space compliance by the contingency removal. The seller may deliver a notice to buyer to perform and cancel the contract.
Question, Simon.
Fire
Yeah.
insurance issues. So increasing occurrence of wildfires continue to complicate the process of obtaining fire insurance. Buyers should be prepared and consider ways that cost and availability of fire insurance may impact the transaction. What did I say earlier? Start as soon as practical, right? Well, in my opinion, as soon as practical means as soon as you get the acceptance, you need to be having, those conversations with the buyer. Hey, we're going to get a home inspection, roof inspection, plumbing or sewer inspection. By the way, let's get on the homeowner's insurance too. Now, one of the things that I would recommend is if the buyer is having issues trying to get quotes, ask the listing agent who the seller's using, because they probably have insurance. They already have that company. Ask the listing agent, hey, Salvador, we're having a hard time trying to find homeowners insurance. Can you provide us with the insurance that your client currently uses? And that way, they already know the property, they already insured the property. It may be just a way to streamline the process a little quicker. Does that make sense? Okay. I'm telling you, we're seeing a lot of cancellations because of insurances. Buyers should be prepared and consider the ways the cost and availability of fire insurance may impact the transaction. Buyers should begin the process early in the transaction, right? Common sense. This wasn't part of the normal, but now it is, folks. And if you want to streamline and have a smooth transaction, then be on top of it. You don't want to be the agent that waits to the last minute and now there's delays and it pisses off the seller because now the buyer is delaying the process. And I get it. That's a good reason. Hey, it's not my fault. My hands are tied. I'm in the mercy of the insurance company. We have already reached out to 5, 10 different insurance carrier, and all of them saying, no, this property doesn't fall under our insurance that we can cover. And a lot of insurance companies are doing that. They're declining on them left and right. It's crazy. It's very, very interesting of what's happening, right? So look at the big picture. and be on top of it, okay? As I said, as soon as practical. I didn't say as soon as possible, as soon as it's practical, right? Because maybe your clients are going on a weekend trip, so they can't start till the following week. I get it. So start as soon as practical. Now we're going to go into the insurance coverage and contingencies. There is a specific contingency in the residential purchase agreement for the buyer to obtain fire insurance. Once the insurance contingency has been waived or removed, buyer cannot cancel based on the lack of fire insurance coverage for that property. Buyers cannot use the loan contingency as a backup. Okay? So once you release this particular contingency, you cannot use, well, the lender is not going to lend because they need insurance. And I get it. But just similar to an appraisal, right? You release the appraisal, right? And the appraised value comes less than what your clients offer, right? And now we cannot come to an agreement between the buyer and the seller. And your buyer's excuse is, well, yeah, we released the appraisal. Therefore, I cannot get the loan. Not a good excuse. Okay. The seller can say, go pound sand. We're going after your deposit. And they have an argument because the contract says you cannot use the loan as a way out because the buyer cannot get the loan. Well, it's the same with the fire insurance coverage, folks. Be careful. Be diligent. Be proactive. Know what you're doing. Make sense? Not here to put any fear, folks, okay? But I want you to educate yourself because this is now one of the unique delays that we're seeing more and more and more. Does that make sense? Okay. And I'm going to test it, all of you. If you don't pass my test, you're not leaving this classroom. Just kidding. No, just kidding. Let's see. I think we have some questions. Let's see. Hi, Simon. Okay, normally checked on my NHD website. The property is in fire zone when writing offers. Awesome. I love it. Thank you, Alan. Is the NHD for all the disasters like earthquake, floods? Yes. Yeah, the NHD, and if I have a few minutes, maybe we can dive into one of the websites and see. We're not going to be able to order, but it'll kind of give you some base, right, of what we're looking for. If it is, I alert the buyer and request he reach out to their insurance agent 1 day of escrow. Absolutely, spot on. Yes, be proactive. Start immediately. Start immediately. All right, let's continue. All right, so fire insurance and due diligence. The increased frequency of wildfires has made it more difficult to obtain insurance coverage, folks, in many parts of the states. Well, we've seen it firsthand here in California, right? Buyers should discuss fire insurance possibilities with an insurance agent, and then factor to consider include the location of the property in a state or local fire zone, the fire hardening of potential property, okay, proof of compliance, whether the insurance is emitted in California, and then the scope of coverage available, including policies for the California Fair Plan. Okay. Now, again, just to reiterate, not all properties fall under this, okay? But still have the mindset that regardless if it does or it doesn't, you still want to be proactive in having the buyer start shopping. Because maybe a property doesn't fall in that zoning, but now they put a stipulation under that particular carrier that now it does fall into it. That may happen. Because what was then is not now, right? So maybe it wasn't a month ago, 2 months ago, but now they just put another layer from that mile radius. Now it's a 1.5 mile radius, and it happens to be the subject property you're in escrow. That could happen. Remember what I said earlier about automobile insurance, right? Okay, your insurance will dictate the type of vehicle you drive. Are you getting a lot of citations, right? If you're speeding and getting tickets and you're getting pulled over by the highway patrol, right? Points go against you, right? And what happens to your insurance, right? They can also decline and drop you as a client. Well, I've been with Allstate for 25 years. They don't care. They see you as you're a risk. They're going to exit, right? Well, that can happen too if you're not in compliance. Important notes, a buyer who inquires fire insurance to complete a property purchase cannot let the policy lapse without exposure and financial risk, right? I think all of us know that, right? Most lenders will incorporate, right? The PITI, right? The principal, what is it? Principal, interest, taxes, and insurance, right? So it's already incorporated. They already have a impound account, right? Because they don't want you to lapse, right? Because if it lapses, they cancel you. And because you get canceled, there may be a chance they may not want to renew. Okay. Because in that between that lapse, something could have happened, a fire, and that's their way of saying, nope, you were canceled, you didn't pay your premium, therefore we don't have to insure. And it always happens when you when you don't have insurance, right? So be very careful and be mindful on that. If the buyer obtains a loan secured by the property, the lender will typically include a forced payment clause that allows the lender to inquire fire insurance on your behalf. I think that's pretty standard, right? Hey, you don't have it. We're going to just and they're going to put the highest and the most ridiculous insurance. They don't care. They just want to make sure they're covered. Because if that house burns, and they lend money on the house and there's no house, they're losing money. And banks are not in the losing business, right? They're in the take advantage of us business. I'm just kidding. So policy obtained through a forced payment clause are usually designed to primarily protect the lender's secure interest, right? I mean, it's only makes sense. And not the owner's ability to fully recoup losses in the event of a fire. Such policies can be very, very expensive. And yes, there are also some limitations to the coverage. They're not going to give you the best. They just want to make sure they can protect their $1 million loan that they gave you. They can care less about the other stuff. They just want to make sure that you are insured. And therefore, if something happens to the property, they're going to be able to recoup their money. Okay. Even if a property is not secured by a loan, the buyer is exposed to all of the losses and costs to rebuild in the event of a fire if there is no fire insurance policy in effect at the time of fire. So it's this, I believe that even if you have a free and clear mortgage, you still need that protection because you just never know. 4th of July can be another way too, right? I've seen situations where dry palm trees, right, and fire works, and then it submerges the palm tree because it's dry, right, and then eventually goes to the roof and it starts a fire, right? So there's many ways that fire can start. I've seen cars in the garage. There's some electrical stuff, and that starts from the garage. There's a lot of combustion, right? Fuel, chemicals and all that can light up. And most of it starts in the garage. So have insurance. Any thoughts, questions, or concerns so far? All right, let's look at some of the questions we have here. So if the alert, the buyer's request insurance reaches out to the insurance agent, okay. Per car, 13% of agents report having at least one transaction fall through in 2024 due to insurance challenges, nearly double from 6.9 in 2023. The primary issue were the unavailability of the insurance and prohibitively of high premiums. Yeah, thank you so much for sharing, Robert. Yeah, 100%. So these are proof factors, okay? Black and white. So if we saw that in 2023 and 2024, and now we just saw the recent fires, insurance are saying we're packing our suitcase and we're leaving California. Just so darn expensive. As it is, it's already expensive to live here, right? You gotta love the weather too. That's why we stick around, because of the weather, right? But man, we've been getting some heavy rains, right? We need it, but man, we don't need that much. My grass is like enough. I don't need that much water. I'm good. Instead of having a green grass, it's a yellow grass. It's like overflow. In the 22% increase in California statewide for homeowners insurance. Yep, absolutely, absolutely. Who pays for NHD reports? Typically, the seller pays for the NHD. That's part of the negotiations. When you submit an offer on the purchase agreement, you'll request that the seller typically pay. Now, your average report is anywhere from $85 to maybe $150, depending on what kind of package premium report you get. I try to get the premium so that way any and all things are covered, because we don't know what's happening outside of the subject property, right? Like if you go to North Torrance, you got the refineries. That's part of the NHD, right? And maybe about 10 years ago, there was an explosion at the refinery, that caused a lot of people nervous, right? Is that going to blow up and all that fun stuff, right? So it's important that either party not waive it, because I've gotten agents also tell me, "Hey Simon, can we waive the NHD?" I says, it's a mutual thing, but I wouldn't. And if that means that the agent comes out of pocket, peace of mind, folks. Disclose, 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 because this can come back to haunt you. Okay, so let's continue. All right, so homeowners protection. California has enacted restrictions on insurance termination rights and certain minimum coverage requirement. Insurers must continue and or renew coverage for at least 1 year from the date of declaration of emergency, pay for the necessary additional living expenses for up to 24 months, allow the owner 36 months to rebuild because of the difficult in finding coverage and contractors after a widespread wildfire. If the fire insurance carrier is not admitted in California, these requirements may not apply. So think about it just for a quick minute. With all of the devastation that has transpired, right? Multi-million-dollar properties done, right? It's going to be very interesting in the next several years what happens, because basically Pacific Palisades is like a ruins now. I haven't had a chance to drive by and kind of check it out. Yeah, but I've seen social media and it's pretty devastating. It's really sad. And this is where people unfortunately see opportunities, contractors. We saw the gouging of rent increases, right? So people are taking advantage of this, which is wrong, in my opinion. And this is why the state has stepped in and facilitated that, no gouging should be done, right? But we still see it on the MLS. A lease property for a rent at 9,000 now is asking for 22,000 a month, right? It's just so ridiculous, right? They see it as a opportunity because a lot of people are homeless, right? So be mindful of that. If you do get a listing and the seller's telling you, hey, can I get my property on the market for rent, but I want $30,000? Well, what did you rent it before? 5,000? Holy moly. That's bananas. Okay, just be mindful of that because the state and the city and counties are cracking down. One of the agents received a letter from the city of Los Angeles to stop. Otherwise, they will pursue. And it's a violation, monetary, and can also mean jail time too as well if you don't follow the rules. Okay. Just a couple of additional resources. Again, all of the information that is provided is straight out of the California Association of Realtors. So this is where the information can be found. So let's take a quick look of the form itself. People on Zoom, can you see my screen?
Yes, sure can.
You cannot see it?
Yes, we
Someone say
can.
yes,
We
they
can.
see the document or not?
Not the document, just the screen that.
No, we can't see it.
Hold
We
on, let
just
me
see the
stop
presentation.
sharing and then
Additional resource.
maybe if I restart it again. 1 second, please. Okay, maybe now. Okay,
Now we
do
can
you
see
see
that,
the
yeah.
fire hardening disclosure? Okay, so this is the form. And as you can see, the last time it was revised was on June 2022. Okay. All of this took an effect what year again? 2021. Yeah. So it's a 4-page document. I'm not going to go through all of it. I'll have a different class on it. But it basically, it's an addendum if this particular property does fall under the feasible space, right? One is the application process, if it does, home fire hardening disclosures, space compliance, the severity if it falls under the zone status. Number 2 is kind of like similar like a TDA. It's a seller disclosure if the seller knows, right? And it goes into certain things that the seller, and I've gotten many questions on this form is what if the seller doesn't know? Well, if the seller doesn't know, okay? And but the seller has to at least make an attempt if they do know to at least fill this out because it's a lot of information. Part 3 goes into the local compliance requirements. Is the property is or not to local vegetation management? Usually like communities that have HOAs, usually they'll have, a landscaping gardening company that comes and does the cleaning because it's a requirement by the city or the county. So if that's the case, then, the seller must provide that additional disclosures. Again, I'll have a class just strictly on this document so we can really dive deep into it. I'm just kind of surface talk the form itself. If there is any type of inspections that need to be done, then obviously that would be need to be disclosed. And then space decision trees. Okay, just a lot of information here, kind of similar to the grid. But again, I'm not gonna go too deep into it on today's lecture. I just wanted to kind of just give you the parameters when it comes to if the property does fall under a specific severity zoning. Let me go ahead and stop sharing for a minute. Let's see here, my NHD. Okay, so let me go back to Zoom and let me share my computer once again. Okay, so here's an example. I'm not saying that my NHD is the go-to natural hazard disclosure, but it's one that is highly used by a lot of real estate agents. So I would say be resourceful, right? Get acquainted with these type of reports because it's very important that if a buyer or a seller is having a conversation with you and they ask you questions and you don't have an answer, you need to know how to direct them to the right people, right? And this is where your representatives come into play, right? So there's resource information here that you can download at no charge, commercials, residentials, earthquake, okay? All that is, again, stuff that you can download. It'll tell you what the cost of the report, residential plus environmental, okay, what that cost. We have rental, and then we have the wildfire disclosure reports. And this is again part of the process, right? If the property does fall, then it would be to your client's best interest to get the full report that will mitigate any future issues from the buyer coming back to the seller because of non-disclosed or limited disclosures. Okay. This is more if you have commercial development and all that fun stuff. But also you can go to the questions and answers. What does each report include? Again, just so you educate yourself, right? And this is just one of many different natural hazard disclosure companies. Okay, any final thoughts before we finish up today's lecture?
Simon, can I ask something?
No one has any questions?